Okay, hi folks. This is Mike, tradestalker.com. I'm going to give you a quick look at my internal indicators and show you what my nightly routine is when I go through my overview. What I do is I collect the internal components of the market, advancing issues, declining issues, advancing volume and declining volume, new highs and new lows. And then for the S&P 500, we have the open, high, low, and close. And for sentiment, I use the VIX. So the open, high, low, and close on the VIX, and the put-call ratio. So I collect my data at night. This automatically does it for me. I update, collects them all. I paste them into the spreadsheet, and what I get then is I get my information is coded here. So this would be the S&P 500 cash. And then we set up with my indicators, short term, intermediate term, and long term. And give you a quick look at last week. We had a market got hit hard into Wednesday, and Wednesday finally showed some signs of capitulation. The ES fell almost 25 points on a closing basis that day. 3 down days in a row, and get to something else in a minute. But in any case, you go across my spreadsheet here. When things start lining up, you get a bunch of greens as a buy. So looking for buys, and at least it's a sell negator. You don't want to be pressing sell side when you're getting a bunch of greens under normal circumstances, and vice versa. If we had a bunch of reds here, it'd be bearish and sell. But we have a bunch of greens starting to line up here with the Bollinger Band, the Band-Aid, my 5-day momentum. Go across the spreadsheet a few more. I'll show you a picture here. We have the various moving averages, 5, 10, 20, 50, and 200 day. So as far as price was going, price-wise, my indicators, we had some green on this price indicators. These aren't RSI or those types of things, but internally. This is the price versus the Band-Aid. That was a buy signal, and 191% below the Bollinger Band. Okay, so this is a prices, just a few things on prices. Most of it's on the internals, and going into Wednesday, we had 3 days in a row where we had less than 1,000 advances on the New York Stock Exchange and over 2,000 declining issues. That doesn't happen often, but along with that, internally, same kind of thing. We have up and down volume here, new highs, new lows, and then we got my indicators across here. This is my RBI model, and it reached a -9, which is very oversold. That was when I see that combined with a 3-day thrust reading, -83 is very extreme. McClellan oscillator is at -272, an extreme, and the 10-day volume ratio at 0.61. Also, I want to come across here and show you that the trend, we had 3 days in a row where the closing trend was above 1.1, above 1.10. Here on Monday and on Tuesday, and on Wednesday it was above 3. Usually a reading on the closing trend above 3 is a sign of a capitulation. So we have some more green here lining up on Wednesday. As far as the 3-day up-down volume ratio at -60 was very extreme. Come across here, the 4-day volume and 10-day volume, both at extremes. They were still at extremes after the move up on Thursday. So things all are lined up. A lot of greens on Thursday or Wednesday. The 30-day trend, all the up and down volume oscillators, my combo oscillator, open thrust, a little bit of everything across the page here as far as short and medium term indicators. And you get a little bit intermediate term oversold here as far as across these. And then thirdly, before we go to charts, I have sentiment gauges, again measured by the VIX. The VIX really jumped on Wednesday. It was up to 31. We were in the teens a few weeks ago. But when this happened, we were 366% above the simple 10-day moving average, which very extreme. And with all these extremes, I got a number of buy signals. These are Larry Connors with my adaptation to it. I had 3 in a row on Thursday. On Wednesday, we had 2 of them. And on Wednesday we had 2 of them. On Tuesday, we had a little early here, but they were a heads up. So sentiment, internals, and price all were combined, giving a lot of greens here for buys, or at least a deeply oversold market. I'll show you here the short-term 5-day momentum oscillator. This is the last 3 months. That was as far as it's been in the last 3 months. Of course, the market has been nothing lately until up, but this is the first time in 3 months that it actually reached a deeply oversold. The McClellan oscillator, this is pretty popular, an old-fashioned indicator, but as you can see at prior lows, it reaches its extremes and then can come back towards the middle. My 3-day thrust oscillator, this is a very good short-term gauge, getting down below these bands, but it reached a very extreme minus 83 on Wednesday. It's come back to neutral. And then again, my RBI oscillator, this was in buy mode, at least negate sells. And my RBI model was that last time it was reached, this was back at the lows back in August. Okay, let me move down to a few more. As far as the short-term internal gauges were last week, the 3-day or the 4-day volume ratio, 4 and 10-day volume ratios. The Hurlin index, 4-day sum of that was the last time it got this deep was at this low here. Last October. And weighted comb oscillator also come from below the bottom band up. These are good on the short term on tops and bottoms. And then down to the VIX signals. To see the VIX above it's 300 plus percent above the 10-day moving average, which very extreme. The reversal then from a high, we had the 5-day RSI go to an extreme and reverse. That was a signal. So the sentiment got blown out also. This is the S&P 500 VIX ratio, which I mentioned in previous commentary that we were near the highs that it was at extremes rarely seen, and that big drops tend to follow. After the first push down, got below the bottom band, and we got a bounce back, but never did return to the mean and the ensuing plunge. Okay, and lastly for the sentiment, the put-call ratio, 10-day put-call ratio, which was slowly deteriorating as we went into the high. Just has kind of gotten blown out of the water here short term. So that is short term oversold. We'll go to the intermediate term indicators here real quick. As far as that, they're still not in good shape. They've topped ahead of the prices and rolled over. It's my positive momentum oscillator. Go through a few others here. This is an intermediate term up-down volume oscillator. It didn't confirm the high and still on downtrends. Same picture with breadth, although they did try to make a high, but they're rolling over, still rolling over. Needs to be turned around. And see, a couple others here to take a look at. Would be the this didn't confirm the high and has rolled over. Let's see it come down through this area if it's going to have a severe break to break that minus 13,000. And this obviously, as we kept pushing higher and rolled over, the last pullback and pushed to new high did not confirm and was it really a heads up when we were at those highs. So we're kind of at the from the polar opposite of what we had up here before the top. We now have at a bottom, and what I'm expecting to occur is for this to set up more volatile action while these work off the extremes. Probably could get a little bit more. A pullback is not gonna a pullback to 1262 area versus the ES 1262 to 1260 area, and on a Dow cash 11,700 has been as a key support on the downside, and we get another sell-off. It's a couple hundred points below. Then we can get, and we get containment down there. We could get turned back around and have another run up. As far as the upside goes, it's going to be a battle of the Dow trying to stay over 11,900, 11,920 area, and the S&P getting back over 1184 area, 1284 to 1285 on the ES. A close back over that on a daily close could give us one more push up towards 1294 area, and maybe 1298, and that's where we're going to draw a line in the sand. Just under 1300, that should be contained. Much more than that, and we could start be on our way to higher prices. I'll come back with this update in a week or two, and we'll see where we're at then. Otherwise, if I have time and everything lines up like it does in a case like this, I'm going to try to do an update here. So stay tuned if we get any kind of extreme action over the next over this next week or two. Check in on and see how things are looking here. Thanks for joining. If you're not involved at tradestalker.com, you ought to come visit us. This is a no-nonsense approach to trading, and we hope to see you there and join our group. Take care.